Hey guys, Boris Tassin from BK Forex. Welcome to our daily Forex technicals for 5/30/13, almost in the end of the month. Trading foreign exchange or margin carries a high level risk whenever suitable for all investors. I ask you to look at this disclaimer very carefully and understand all the risks associated with trading on margin, and seek advice from an independent financial advisor if you have any doubts. Well, the key question of the day today is dollar rally done. I think the charts are starting to give us a little bit of an answer. We're obviously continue to have volatility. Let me just pull out the I actually want to start out with a dollar yen chart because we already have tons of volatility at the open of Asia session. Here's dollar yen dipping into the 150 and then popping right back out. This was a dip off the Nikkei dive, which took about almost a 3% dive, then recovered. And this looks like to be a relatively bullish candle if we kind of end up at these levels. Obviously, we've been testing this 100 level, 101 level for a long time, 2-3 times, broke it through the 150, and now seem to be finding a lot of buyers over here. I still find it to be a dead cat bounce in many ways, because if you look at the bear with me, let me just get this line over here. If you look at what's going on over here, you're still seeing a whole bunch of essentially lower highs. Just sort of, here's a lower high. There's a little bit of a lower high over there. This is the hourly chart, and this 102.50 level, definitely a very, very sticky level for dollar yen. So whatever we're having as a bounce right now may just be a short covering bounce. I still think that 100 may be the key test for this pair before we find a true corrective bottom in the move. If we go back onto a longer time scale, you can see how we're testing this 101.50 level, but the breakout level is the 100, and 100 tends to be when it tends to break out from these levels and has to return to these levels. That seems to be how the completion is. Also on the 4-hour chart, you can really see the downslope much more pronounced as we're making consecutively lower highs. Even this high, even though it's marginally higher, is effectively the same height, therefore suggesting that for now the trend is sell the rallies rather than buy the breakouts in dollar yen. Although they're pretty vicious move one way or the other, as you can see. On the euro, relatively quiet, building up. Euro is obviously wicking out here at this 29.52.30 level. But one of the interesting things is that the opposite dynamic is kind of happening here, as you can see higher lows, in euro building. And it's not at all inconceivable to see that maybe this thing is going to rally and try to challenge the 30. Now, 30 obviously is a big resistance. 30.20 is a key resistance, so there's going to be a lot of sell orders stacked around those levels. But sell orders were made to be broken, so it looks like if we can just build up a little bit of momentum here, we could mount a respectable challenge towards the 130 level as we go forward. If we break to the downside, if we take down the 29s, that would be another failure. And this time, the failure actually, I think, kind of looks negative, because if you look here, you basically have a set of lower, oops, let me get rid of this thing. You have a set of a little bit lower highs here, and a break. In other words, if it doesn't clear the 29.80s towards the 30, another failure somewhere around here to break all the way down to the 2900s could take us down to a test of 28.50. A break here obviously makes it a much more negative trade. Overall, it's a churn. It's basically a churn in the euro, but the bias within the churn appears to be moderately to the upside. That's the only thing that I'm saying as far as the trading. And look at dollar yen. Dollar yen just basically making mockery of all the shorts as we start to have just a very, very powerful short covering rally here in Asia. Having said this, though, we come up to 101.50. It's going to be very interesting to see just how powerful this rally is, because if we kind of stall out at these levels and come right back down, to the bottom, I think another test of the 150 could be in play. But for now, you have to respect this move. This is a pretty strong move off the bottom. If it holds near the highs for the next 4 hours, it could signal a near-term bottom in dollar yen. Looking at cable is just doing absolutely nothing. It's trading between the 50s and the 51 and 51.50s, just kind of consolidating. This is a pretty choppy area here. The 51 to 51.50 definitely has some resistance. We try to test the highs in North American session got rejected pretty quickly. But there is support here at the 50-50. So again, cable more of a range-bound trade here. Break above 51.50 on a strong up move, on a strong anti-dollar move, could take us up to 5,200 at least, maybe even 5,250 as a test. On the bottom here, we definitely have a near-term double bottom here, so that level under 50-50 seems to be a pretty decent level of support. And Aussie maybe finally, I don't know how many times I have to call a bottom here, but eventually I will be right. Maybe finally starting to form a little bit of a bottom. Yesterday was obviously a spike bottom, loaded into the 95s. 95 held, but to really be convinced that you have a modicum of a rebound here, you have to see 97s broken to the upside. If 97s are taken out to the upside, you could feel a little more confident that Aussie did make a small spike bottom, and then we have 98s, 99s as the next level of resistance for the trade. So basically, that's how the day shapes up. It could be just as volatile, maybe even more volatile than it was yesterday. The yen cross is obviously going to be a key component, but also the euro on a sneak attack towards the 130 could be the story of the day today as we proceed. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg for BK Forex, over and out.